There have been several debates among cryptocurrency evangelists and influencers on replacing conventional currency with cryptocurrency. The main purpose of a conventional currency is to serve as a medium of exchange. The amount of currency to be printed should be determined by a central authority taking national and international conditions into account. Inflation is an important factor that stabilizes the value of the currency. There is a term known as good inflation, where the central authority balances the economic situation by degrading or upgrading the value of currency or purchasing power. There are over 1,500 cryptocurrencies in circulation competing against each other, and the number will increase as anyone can introduce a new coin in the cryptocurrency ecosystem. Though every cryptocurrency aims to become the most utilized mode of payment, only a few of them will survive. The positive and negative outcomes of cryptocurrencies replacing conventional currency. Reliable transaction records and better transparency. The transactions are verified for authenticity, records cannot be manipulated, and cryptocurrency cannot be duplicated. All these factors will reduce corruption in the economy to a great extent. The blockchain records can be viewed by the concerned authority, and they can even track how the funds issued by the government for economic welfare are utilized. Eliminating barriers and cutting down costs. Cryptocurrency makes transfers easy, quick, and also cuts down the transmission and intermediary costs. Even for raising funds, cryptocurrency can work as a boon for startups where they don't have to follow lengthy procedures and most importantly don't have to pay heavy interest on the bank loan. This sounds like a good news for some, but for the middlemen, this could be the cause of unemployment, especially in overpopulated countries. Too volatile for daily transactions. Cryptocurrency is seen as more of an investment rather than a payment utility due to its highly volatile nature. In a normal scenario, conventional currency fluctuates in the 1 to 2% range. But with cryptocurrency, the fluctuation can be massive, which makes it unreliable for daily transactions. No central authority to maintain stability and manage crisis. Central banks support the financial ecosystem of a country by taking various measures that bring stability in the currencies. Even during a financial crisis, the central authority undertakes measures like changing the interest rates, print more money, etc. to get the situation under control. Due to decentralization, manipulating cryptocurrency becomes difficult, and the power to create new cryptocurrencies lies with the miners. There is no central authority or economic measures that can stabilize the cryptocurrency, which in turn can result in unfavorable economic conditions. High electricity and server requirement for verification, storage, and transmission. Mining requires enormous power to verify the transactions, and every transaction adds to the size of the ledger. Storing this massive amount of data needs huge server capacity, but the problem arises when this data needs to be shared every time a new transaction is added. No, never, because most governments will never accept them for tax payments. Doing so would mean giving up monetary policy as a means of economic control, and ceding government functions to an unregulated, unaccountable group of computers that probably won't even be under the control of their nationals and are susceptible to hacking. Do you really think the US government would allow people, not just in America but all over the world, to create the US currency at will? Or that any other government would in effect allow the supply of money to be privatized? Furthermore, as it stands now, the only attractive feature of cryptocurrencies is their anonymity. However, it's impossible to have a credit market functioning with anonymity. Who'd be willing to lend someone money if by definition that person's identity can't be established? Without a system of credit, economies can't grow. Finally, look how many cryptocurrencies there are already. This is just like it used to be in the US before we had a central bank, when there were thousands of different currencies circulating in the country. What a hassle if you have currency A but your local store only accepts currencies B, C and D, and who wants to watch the exchange rate among all of them as it fluctuates second by second? And let's not even discuss how much electricity is already being used just to mine bitcoins. It is possible that some governments could introduce a cryptocurrency version of their own currency, but only if they were running the books.